Hello, everyone. We're doing another silver giveaway for the month of February. In December, we gave away 10 ounces of silver. In January, we gave away 20 ounces of silver. This month, I'm giving away the biggest silver giveaway yet. It's 30 ounces of silver from my personal stash to a lucky winner. How do you enter? You have to like the video, subscribe to the channel, and you have to comment your favorite type of silver or your silver price predictions for February. So if you want to get involved and if you want to have a chance to win, this is my biggest silver giveaway yet. 30 ounces of silver. Hit the like button, subscribe to the channel, and comment your favorite type of silver or silver price predictions for the month of February. Good luck, everyone, and talk to you soon. Hello, everyone. Thanks for joining, and welcome back to Wall Street Bullion. Before we begin, please hit the like and subscribe button. It helps us grow tremendously. Our guest today is Michael Pento. Michael is an active money manager at Pento Portfolio Strategies. Michael, welcome back.
Thanks for having me.
Yeah, thank you for coming down. I want to talk to you about all the craziness that's in the markets, the financial markets, and silver and gold. Last time I had you on here, silver and gold was a lot lower than where it's currently sitting right now. We had that crazy run up to $120 in silver, came back down, had that big drop. Now we're kind of hovering and going sideways at the 70 mark. What are your thoughts right now on precious metals, Michael?
Yeah, well, I was very bullish on them for most of last year. I still own a little bit of gold. I sold my silver and platinum as a trade because I'm a tactical trader. It just got a little too memeified for me, if I could
Yeah.
use the word. I mean, it was just like everybody was piling into silver because there were shortages. Everybody knows about the shortages, and then they were talking of course, it's use in AI chips and data centers. All that's true. But then when I've been in this business for 35 years now. So when I see charts go, like that
Yeah.
vertical, and I know it's just consolidating here. Might chop around for a while. We don't have the precious metals don't have the benefit of massive rate cuts anymore. So, the thought that Kevin Warsh is going to ride in and slash interest rates, or the new Fed chair, whoever it was going to be, like a puppet of the president, that was my great fear. It didn't turn out. I mean, Kevin Warsh is a hard money guy.
No.
So I don't think you're going to get hardly any rate cuts in 2026. And you might get a serious reduction in the Fed's balance sheet, God willing. Imagine that, Ivan. Main Street prospers and Wall Street flounders for a while instead of the way it is currently, where this is the financialized uh, industry here. So the entire U.S. economy has been totally financialized.
hmm Is there anything that's concerning you right now in the financial markets that you have your eye on?
Well, there's a couple of big potholes here for 2026. Of course, I'm always worried about the repo market. If Warsh does come in and cut rates cut the size of the balance sheet significantly, we could have a big problem in the repo market because the reverse repo facility is now zero.
Right.
That was all the excess liquidity for the bond trading, and because there's so much debt outstanding, there's a tremendous amount of need for reserves, for bank reserves, and they're very, very thin. Listen, it's just like, I want reality to happen. I want this great reconciliation of asset prices to occur because it's just not a sustainable situation. I mean, the fact that home ownership is out of reach for most of the nation, or the fact that 80% of consumers are drowning in debt and trying to make ends meet, and it's just the top 20% that are doing well. That's not the way a country should be run.
hmm
I'm hoping and praying that we have this cathartic rebalancing and a redistribution of wealth away from Wall Street and towards Main Street. Let's hope that happens. It's going to be very, very painful though in the short term for sure.
hmm You said earlier you sold your silver, you sold it was your platinum, correct? Yeah.
Platinum, yeah. I'm
W-
holding
s-
gold.
So where now are you making your money work, or where do you think is a good spot to be?
So I've moved a lot overseas. I have a lot of money overseas. I still have aerospace and defense. I'm pretty big on the Indian economy. I think that, that's one of the fastest growing economies out there. It's really done nothing for the past year. Had a nice trade settlement with Europe and even a one with the United States. So I think India has some room to run. I am short the long end of the bond market also because I just don't see how interest rates can go any lower outside of a recession.
hmm
We have a problem in this country with being able to service our debt. If inflation goes back to where I think it's going close to double digits in the near future. I mean, not near future, doesn't mean next month. I mean, go in the next few years, because I see stagflation as far as the eye can see, which is when I'll get back heavily into my precious metals position. Who's going to buy all this debt, Ivan? We are going to have deficits. We already have deficits that are $2 trillion. The CBO raised the estimate for the next decade for our deficit to increase to like $30 trillion. It's on top of the 38 we already have. So deficits keep going higher and higher, and the foreigners don't have appetite for our debt.
Right.
And it's not just the national debt. Look at the trade deficit. The trade deficit for 2005 was $2 billion less than it was in 24. So 901 billion versus 903 billion dollars. So we have a tremendous amount of debt in this country. We haven't fixed out all of our problems. Haven't fixed any of our problems. We're making them worse. So what I'm worried about is I'm worrying about a repo crisis. I'm worried about the end of the yen carry trade. I'm worried about the whole overcrowded AI investment trade, which is AI is a great technology, just suffers from a tremendous amount of overinvestment. Look at some of these private credit firms that have invested in the AI infrastructure. They're on life support. Now, telling somebody you can't, private credit is illiquid by definition, but telling somebody your assets are worthless but you can't get out, I mean, does that make you as a consumer more confident?
No, absolutely not.
No.
And if they're putting all this money into the infrastructure for AI, like all these data centers, and it's all on potential earnings that AI will do in the future, and what if they don't hit those targets, right?
It's leverage. They're not. It's no longer buying these chips and data centers on cash flow. It's leverage. It's debt.
Wow.
That they're using hundreds and hundreds of billions of dollars. And if the ROI isn't there in the near future, the cash flow to service these loans goes bankrupt, goes away, and then you have a lot of trouble, especially in the shadow banking system.
Hello, everyone. Hope you're doing well. If you can please click the link in the description below and just follow us on Instagram and follow us on X. It'll be much appreciated. We're putting out new content every single day. We're doing financial content, silver and gold, and political content. Just please take a second, click the description below of this YouTube video. Follow us on X and follow us on Instagram. Thank you so much. What happens if we do see in 2026 a big problem in the repo market? What are the effects of that, and what should we be watching for? How should we counteract it?
Well, I guess Kevin Warsh, even though he claims to be an Austrian economist and is a hard money guy, the history for Federal Reserve chairman is to just become politicized once they get there, and he'll be under a lot of pressure to cut interest rates. Maybe he'll even be under a lot of pressure to increase the balance sheet. The balance sheet is now increasing by like $20 billion a week, which I think is so utterly disgusting. When you miss your inflation target to the north, so when you're above your target for 5 years, what do you think a central bank should be doing? A good, honest, and a prudent central bank would be raising interest rates. They wouldn't be cutting interest rates.
Right.
We certainly wouldn't be going back into QE, which is exactly what we're doing. So, that's why I think stagflation is, around the corner here.
Do you think they're worried if they raise rates, something's going to break in the system because of all that mounting debt?
Like I said, there's no liquidity. There's no liquidity left in the bond market. And so who cares if something breaks? I mean, the charter of the Federal Reserve in 1913 was to take bad assets from banks at the discount window. So you take your treasury, your bank is in trouble. You take your treasury and you get credit, which is high powered money, and at a discount. It's not the charter for the central bank to always keep asset bubbles afloat. It's just not that. It's just businesses are supposed to allow it to go belly up, fail. It's called creative destruction. We have to let that happen. Otherwise, we're going to be forced into this endless flywheel of just continuing to print money and lower interest rates. The middle class has already been eviscerated. Wipe it out completely, and then you have civil unrest. God forbid. I mean, this is not a way to run a country.
No.
Hi, I'm Michael Piccioni, founder and president of Can-Am Bullion. At Can-Am Bullion, we are more than just a precious metals dealer. We are your trusted partner in securing your financial future. As an authorized dealer of the Royal Canadian Mint, we take pride in offering only the highest quality gold and silver products. And with our best price guarantee, you can trust that you're getting the most value for your investment. We offer free, no obligation consultations with one of our precious metals experts. Our commitment to excellence has earned us a 5-star Google rating, a shopper-approved seal of approval, and an A+ rating from the Better Business Bureau. These accolades reflect our dedication to transparency, integrity, and exceptional customer service. Are you ready to take the first step towards financial security? Contact Can-Am Bullion today for your free consultation. Let us help you build a brighter future with the power of precious metals.
No, absolutely. What would be your piece of advice for investors right now, or anyone in the precious metals market watching you? What would be your guidance for them in 2026?
Well, just I always own 5% of gold of your net worth in physical possession. But by that I mean not doesn't have to be at arm's length, but at least you are the only one that can get to your gold. You don't have to
Right.
allow any financial institution or government to allow access to your gold. And I would just keep your powder dry because, as I said, even though I think we're going to chop around here for the next few weeks and months, I think that all precious metals, silver, platinum, and gold, are going much, much higher because of what I see as intractable stagflation going forward. With this AI productivity boom, you're going to have a lot of unemployment coming down the road. So you're going to have a tremendous amount of the need for universal basic income. So when you pay people to stay home and not produce, your debt and deficits are going to absolutely explode higher than they already are. We already are a nation that's looking at over $60 trillion of debt by 2036, well over $60 trillion, and
Hmm.
well over 120, 130% of GDP. So there is no you could if debt monetization worked, we wouldn't have a problem with debt in this country. But
Right.
now we're teetering on insolvency. And the reason why debt monetization doesn't work, you say, well, you can always just print a bunch of money and that devalues the debt. Well, not if it's a floating interest rate. Not, it doesn't work that way when interest rates spike. So
Right.
I also envision a world where the central bank of the United States comes and caps the long end of the bond market too, just like Mario Draghi did in 2012.
Yeah, absolutely. Now, Michael, there's so much speculation about silver. We are a silver and gold channel here, Precious Metals.
Mm-hmm.
And you said you left the silver because it was becoming too much of kind of like,
It
yeah.
was a meme. It was becoming a meme stock. But
Hmm.
I'll get back in. But I'm a tactical trader.
Yeah, absolutely. Do you think it's going to
So
go down lower then from where it is?
I can see a chop around here in the $70 range for a while. Wouldn't bother me. It wouldn't bother me at all. Listen, this is a major move from $20 to $120.
Yeah, it's crazy.
So it has to chop around and consolidate. And wouldn't surprise me if it did it around 70, which is halfway between 20 and 120. So and then before it makes its next move, and I'll be on that train when it goes higher.
Yeah, no, absolutely. Well, Michael, I want to thank you so much for coming down and speaking to the precious metals community, everyone here watching you. I want them to connect with you, though. I want them to follow your work. Where can they follow you?
So the website is pentoport.com. And you can subscribe to a podcast there called the Midweek Reality Check for $50 a year. I'll give you my high level portfolio allocation if you do that. And if you have $100,000 to invest and you're a U.S. citizen and you qualify for a long short portfolio, then I will manage your money directly in the inflation, deflation, economic cycle portfolio.
Nice. No, I highly recommend everyone. Please go check out, the website. I'm going to put the link in the description below. But Michael, thank you so much for coming down and giving us the updates, giving us, the insights on the markets and where we're going. And as markets develop, as always, love to have you back on soon.
Look forward to it, Ivan.
Take care.
Take care.